Hello and welcome to the Trading Zone. I am Joe T. Gay of Equity Armor Investments. Hope everyone's having a great day, having a great start to the week. So far, it's not a great start for the market. We're off of the overnight lows, though, so that's certainly a great sign. Just want to give everyone a chance to hop in here, though, as we do. Again, it's just another week, another down day in the market. It's just been a disaster over the past few trading days. I want to get into all that. I got some good charts that we'll be looking at, and of course, I have a trade. Big winner on last week's trade. If you were following along with me, that was a good one for me. Just good protection, of course, to slide in there. Always good to have that protection on, especially when we're seeing the markets like we're seeing right now. Just want to give everybody a shot to join in there. Remember, I'm checking out your comments. You want to ask me anything, ask me to look at any charts, happy to do so as we go. It's just been a busy time to be a trader, especially a volatility trader. Sorry for me jumping on just a little bit late this morning, but I have other obligations to get to also, so make sure that all the trades are in and looking good, as I'll just be watching the market as we're going on, of course. So anyways, great to be here. Great to be here with all of y'all. Having trouble with my screen here. Let me just. All right, there we go. That looks fine to me. I wonder what's going on with my my controls here. Yeah. So, anyways, good to be here. This is the Trading Zone. I'm Joe T. Gay. Thanks everybody for hopping on. Super busy day, as you know. The market's well off of its overnight lows, but we're still down pretty big. I think this has potential to set up a nice little hammer. I want to get into that later into the show. Got a potential trade off of that also. Of course, we know that this is all happening because of the tariffs and what's going to happen after the tariffs. We saw a Pittsburgh aerospace supplier company citing force majeure. They're not going to deliver their parts because the tariff is going to shift all the prices around, and they don't know what to expect. And a lot of these companies are operating on razor thin margins. So you tack on a tariff onto any price, it's going to make it so they're operating at a loss. And it just makes it so these companies cannot do that. They have to change the prices before they send these parts out. So that's a really interesting thing to be watching. How many other companies are going to cite this, or how many other companies are just not going to be able to deliver because they'll be doing so at a loss, and what's going to be the follow-on knock-on effect. Very critical to watch all this as it plays out. Again, nothing's really taken place yet. We're watching this closely. There is potential for this all to shift. The market's watching all that very closely. I think that's why we're seeing this uncertainty, is where we have the VIX. It peaked at 60, maybe just for a heartbeat, but we're kind of stabilizing in there, still in the high range. You got the VIX front month future down at 31.30 right now. VIX at 48, so that's actually a big gap between that spot future and the front month. So, but anyways, a lot of uncertainty out there, a lot of fear. Can the Fed come to the rescue and save us? Maybe there's a little bit of hopium there going on right now. The S&P 500 really well off of its lows, of course. So maybe there's some hope that the Fed can come in and stabilize the market. We know the market would like it for the Fed to cut rates, but I think we like it. I think the market likes it in a much different context where there's no external shocks going on. We want to see the Fed cutting rates just because the inflation expectations are lower. While the economy remains hot, we're not necessarily at that spot right now. We're kind of more at the point where the Fed will be cutting rates because there's just a crisis potentially out there in the economy. So we're watching that closely. Maybe we can get a rate cut and no tariffs. I don't know. I think maybe that's the best case scenario. But I think these tariffs, the market's starting to take them a lot more seriously, expecting them to come on in some fashion. Just the question is like how real is the damage? How disastrous is it? What's fear out there that's not really true, and what is the real story out there? So with that said, big events this week we're going to be watching very closely. I mean, there's a lot of unknown events policy-wise with these tariffs, which are just potentially looming out there. But big inflation data points this week: CPI, PPI, of course. That is going to be a big factor for the Fed. How soon they can cut rates? I think we're all anticipating that. So I think we're just going to be watching and waiting for that eagerly. Now, as we do so, of course, we're seeing some huge moves in this market here. Let's just take a look at what we're seeing. This is just a massive rally here off of this low. We were 430 on the low. So yeah, we're 200 plus points higher off low, up one. This is I think I'm going live and the market just starts racing higher. I think that's I think I'm causing it. I think just got way ahead of me on my trade here. If you just kind of look at this big picture though, wow, that was a very quick rapid sell-off. I think we live in interesting times. This is going to be a week that I will remember for my career. But if you kind of just want to look and follow through here, we had a head and shoulders topping formation here. We had absolutely this formation diagonally coming down here. I can click on this chart here. We had one shoulder, two shoulders, three shoulders. And if you the amazing thing is if you track this out here, we got this like 5,500 on the downside, 6,100, 6,160 on the upside. It's about 600 points here, which 650 points will take you from like 5510. And amazingly, it comes basically down to about 4860, or 4840, sorry, which is very close to where the overnight lows were. So this price target, I'm saying, of this head and shoulders top formation was approximately right here where the overnight lows, which is really fascinating and really set in mind for me the potential for a short-term turnaround up. You got to remember in these bear markets, these rallies can be quite extensive, and I just want to point out real quickly just this massive skew here. And when I'm looking at this skew, of course, this is massive fear here in the market. But the skew, remember, this measures the difference between the 25 delta put versus a 25 delta call in the S&P 500. Just going back, this is like we're back into COVID levels of the skew here. This is really high levels of skew. There's a lot of fear to the downside, a lot of uncertainty to the downside. So these downside puts were super expensive. To me, this morning. I guarantee this is turned around right now, and hopefully that is a sign that the market is bottoming. And absolutely, if right now I'm sharing this trade with you, this is looks a lot better than when I put it in this morning. Of course, I'm sharing a kind of like a way for me to just like look in there, say, hey, there's potential out here for a bottoming formation here. There's potential for this market to just really race higher. But I want to do so cautiously. That's what I was looking at this morning. For those of you who are subscribers to the trade alerts, you got this trade right on the open when it was a $5 trade here, where I'd be looking at using that skew to the advantage here. Those puts are super expensive, so just selling this April 465 put and then just saying, hey, I'm going to be collecting a lot of money for that put. I can actually buy a call spread and still be collecting collecting some money. So I bought the 500 call, sold the 520 call, and sold the April 465 put. Let's just take a look at how that looks real quick while we're chatting here. Pull up a different window. Again, really high skew, really high, huge potential for the market to be moving big, of course, with all this uncertainty. That's why I put that trade on. They had a break even down at about 460 to the downside. Wow, this is already up at 520. Like I said, yeah, there's a lot of movement out there, potential. This was a quick winner. Remember, if you wanted this email this morning, right as when it was collecting $5, make sure to sign up for the trade alerts, equityarmorinvestments.com. You'll see it there. And let me just punch it in, see what the price is at this very second. Whoops. Delete that. Punch it in. I could sell the 465. 465 put. Any questions you have, be sure to shoot them in. Happy to talk about that. But yeah, this is sorry, I have trouble with this. This is absolutely a violent market. We need to remember that as we're trading, it's hard to get in and out of things, of course. As we can see, that trade went from a $5 credit to now it's a $8 debit in about an hour and a half. That was a lot of fun. That's working for me really nice here right now. I love to see it. And just expecting this back and forth. Now, we should expect in bear markets violent rallies like we're seeing today. Of course, in bear markets is when you see the short interest start to rise. Some hedge funds, some people get caught off sides, getting caught short the market. So absolutely, I'm not a huge surprise to see the market bounce as rapidly as we have. Just fantastic to see these moves, and it's just if we're trading cautiously, we can take advantage of it. Certainly took advantage of it this morning. That was a fun one for me. Yeah, it's hard to say, what's going to happen next, or if this reminds us of anything. Of course, we need to remember there have been trade wars in the past. Of course, we went through in 2018. We had a negative market, had a lot of volatility in 2018. We saw some real situations where people got caught offside in 2018. Saw a lot of volatility from that, like the Volmageddon instance that we saw in Feb of 2018. We had August of last year. We had the Yen-mageddon, maybe, where people were caught offside on some currency trades. So we should just be cautious of that. Volatility will be coming, of course, with all of that, and just tremendous moves in very short order all throughout the day, and we should be expecting that. And this is not going to be the last one. We can guarantee it. In the bottoming process of COVID, we're talking about the skew reaching COVID levels. We had a period where February kind of started the sell-off, where we had a week straight of like down days. And then we really started to see some choppy movements. Now, the first 3 weeks of March, of course, we were down very big broadly, but we had some very large positive moves within that mix. And the bottoming process, we need to remember, is really when you start to see that choppy trade happen. We have a huge negative day, huge positive day, huge negative day. It's kind of the indecision there. People trying to figure things out when you have that. So we should watch that carefully. Be mindful that these moves are going to be quick. Have our positions, very thought out, meticulous. Really makes a lot of sense to do so in spreads. For me, this is the example trade I gave today is really just showcasing why using optionality to express a position in the market is just much better for me, much less risk. I can win in multiple ways with this trade, and just kind of know where my levels are, kind of pick a level. I don't necessarily need to be long the market right here. But again, if the market goes lower, I love to be long the market if it's lower. If the market's higher, I'd love to be long it while it's higher. And why not collect some money while it's happening? Again, a lot easier to do when the skew is up here or the skew is super high. A lot easier to do when volatility is as high as it is. So just kind of read the cues of the market, using it for my advantage. Really, really fun one to do, and it was fun to see. It was fun to watch it move so quickly live while I'm talking to you all today. I'm going to leave it there. Remember, check out equityarmorinvestments.com. Sign up for these trade alerts. Happy to send them along to you every Monday morning and throughout the week. And make sure to tune in every Monday at 10 Eastern to hear more about the market, what's trading, and volatility. For Equity Armor Investments, I am Joe Teague.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.